It was one heck of a week this week with the Fed meeting, the ECB, inflation numbers. It just did not stop. And many traders, as the dust settles, are wondering what's next.
What more can they do to me?
Where are the markets going next? And in this video, I'm going to give you my take on everything that happened this week, as well as going into next week, what I'll be looking at. Let's jump in. All right, guys, so I wanted to start with, of course, the big one in the room, gold, which found what seems to be a very interesting bottom. Now, if you guys are not familiar, we had what is commonly referred to as a Wyckoff spring. If you've never heard of a Wyckoff spring, it is, of course, pioneered by a gentleman by the last name of Wyckoff. And it's this concept of essentially where you have a support level where all market participants are really, really keen on these levels. And this doesn't happen often, but sometimes you get what is called a Wyckoff spring, which is this concept where it briefly dips underneath this area and a lot of people start going bearish, right? Myself included. This looked very bearish to me. But then the surprise move brings us all the way back and into the consolidation zone and perhaps even starts a new trend. Now, I didn't have any trades open on gold this week, but this was a very impressive technical move. Despite how confusing this may be to traditional support and resistance, this is a rare signal that sometimes can be very strong. When you have the breakout and then just completely shoots back the other way, this is often, like I said, called a Wyckoff spring. So anyways, I wanted to talk about gold from a technical perspective for a moment. We've been in consolidation, but not so much off the higher time frames. Today on the live stream, Kenzo made a great point about Kenzo, who is a guest on our show very regularly, made good points about the longer term upward trend that we are in gold and how recently, perhaps we were just in a traditional pause or consolidation prior to a bigger move up. So for gold bulls out there, myself included, I'm looking for breakouts on this chart. Now, of course, I want to show you some contributing data as to why I am so bullish if we're able to get a breakout. Now, again, let me go back to this for a second. I'm waiting. The key here is I do not have any buy trades right now. I am waiting for strength to come into this market to the point that it actually crests or beats out the resistance points that we have here. Now, here is what I am looking at in terms of contributing data. So we get a +5 score on the EDGEFINDER, and that may not mean a lot to you if you're a newer viewer of my channel. The EDGEFINDER is our company's software tool. A1 Trading is my company. We build software tools for traders, and a lot of it is data-driven stuff. And so when we look at gold, what we have here is some interesting data. We have COT data, which shows us that institutional positioning is very long. Big money is very, very much on the long side of the trade for gold. Retail, however, is very short. We see retail traders shorting the gold market at a very high rate. We take a look at seasonality and we can see that month to month, the summer months have a slight positive drift for the price of gold. So these are bullish factors. We also can see that in terms of economic numbers, we have kind of a really good spot. We still see inflation pretty dang high, which is a generally bullish thing for gold. And if we take a look at, for example, GDP, we see some economic slowdown potentially, and any fears there can be positive for gold. Unemployment did tick up in its most recent report, which is of course a bullish thing for gold, as generally fears about unemployment, any rise there can actually offer a little bit of safe haven aspects to gold. And then of course the money supply increasing, which money supply, if you're not familiar with that, during 2020 money supply dramatically increased, and that was part of the reason we saw such a massive run up back in 2020, which is this move over here. Money supply went parabolic and we printed more dollars than ever. And so now, with all of that to say, I am looking for the technical side to align with what the EDGEFINDER has given us. So the EDGEFINDER is generally bullish based on the metrics that we follow, but now I'm looking for possible break and retest opportunities to get long gold. So this is a trade setup that I've been talking about for weeks now, and I haven't really been able to get it because we've continuously fallen apart every time we come up to this 1965 level, which so far doesn't seem to be working out very well. I don't have any trades, but like I said, this is what I'm looking for. The break, and if we get it, the retest will be what will get me into a potential long setup going into gold next week. So that's one of the big things for me. Now this week, I traded a lot of S&P 500. This was one of my best P&L weeks that I've had in this account in a very long time. Overall, the account is up quite a bit this year. Now, last year was tougher, but this entry on the S&P last Friday, we closed everything out on Wednesday, but in like 5 days of trading, 4 or 5 days of active trading, this trade ended up being at 1.6 or 7 R and eventually closed for about 5 R once we got trailed out. Many of you guys may be familiar with this, and we took this trade and shared all the updates inside of the group. Meanwhile, Frank, my trading partner, he's been long gold. He caught some great moves there. He's also long, or was long, NASDAQ. I think he's still in that trade. I mean, I think Frank might even actually be outperforming me this week. So Swiss yen, he also caught Swiss yen, which if you guys have been watching the yen pairs, you know where I'm going with this. The Swiss yen has been a monster. He's been trailing a stop on this one. And so Frank is absolutely killing it. And not just the Swiss yen, but just generally yen pairs have been going crazy. The Bank of Japan, a quiet contributor to this week's news event, actually wasn't so quiet. It had yet again more dovish outlook for the Japanese economy. So this broken level of resistance acted beautifully as support. Dollar yen bulls are definitely happy right now. You also have GJ, which was a monster mover. You can see risk on just flying high right now across the board. So for me, there's nothing I can do in a move like this. I can't buy this move, but congrats to people like Frank or people who are trading it with him inside of the group who caught that Swiss yen move. It's absolutely been crazy. By the way, guys, if you would like to join the group, we are currently ending our sale soon. Our 50% off sale is going on right now. But a little secret extra discount for those of you guys watching the channel. If you message us right now, you can actually get 55% off. At the link in the description of this video, you'll see a link that takes you to our direct message center. Click that link and this is what it's gonna look like. It's gonna say, hey trader, what can we help you with? Click here and click 50% off and ask us specifically for the 55% off discount, and someone from my team will hook you up with a membership for more than half off. We've never done this before. We're looking for more serious members. Summer months have been a bit quiet, so we're looking to add some people to our group. And again, we're looking for serious traders only. We want people who genuinely wanna learn this stuff, who are gonna take it seriously. And again, that's why we're offering such a big discount. If you'd like to join us, like I said, click that link and join us there. Yeah, so I wanted to also say, in terms of the indices, this is a similar story to some of the yen pairs. I am bullish, but I've got to see some pullbacks come into this market. So here's the S&P 500. I traded this week. I was actually into this trade over here on last Friday, rode this market move all the way up to this point, and actually ended up getting trailed out during this candle. Of course, feeling a little silly now that it ran higher, but again, that's trading. Sometimes you're not going to catch the full move. I'm going to try and be patient and see if we can get a 61.8% retracement around 43.80. I'd look to add another trade and try and long this thing again with a tight stop, of course, making sure that I don't, catch hold the bag, if you will, if this thing does end up reversing. But I'm generally pretty bullish on the indices. Again, the Fed signaled kind of more rate hikes towards the end of this year, but again, many people calling into question how serious that is. We see numbers looking very good. It seems like the victories in inflation could persist, and we very well may see the Fed kind of achieve its goals in getting inflation more and more under control. So it's an interesting one to watch, but I am very bullish indices. If we can get pullbacks, NASDAQ 100, same kind of concept. A bigger pullback may get me intrigued in buying it yet again. I've been trading these things very long this year, and it's contributed to some really good results, which I'll show you now. All right, guys, and we are taking a look here at the trading performance so far this year on this account. You've got my year-to-date performance. Here's the thing, right? In terms of month to month, we've had one negative month. This is certainly a lot better than last year. I want to be transparent about this. Last year was a tough year for my long-oriented indices and gold trading account. I did take some shorts in here, but the markets really had a tough time last year. So last year was not so good. 2021 was excellent. 2020 was also excellent. And this year, we are off to an amazing start. So again, I trade a lot of indices and gold inside of the group. So again, you can get 50% off right now. If you message in, you get 55% off. Click the link down below in the description. And thank you guys for watching.